traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. I am posting a chart here from Peter Eliades, the stock market cycles. He was on our show on Friday. I want to go over this because it's very important from a timing perspective. What Peter has done here, as you see on the upper side, upper part of the chart, is the VIX index. This is going over a long period of time. And what Peter was showing is every time the VIX index is nearing a major low, we have tops in the stock market. You can see here the low in the VIX at the far left there. That was the first top. You can see the second one right here. You can see the next one that was right here. And now he has a sequence of three of them. Here's the prices of the S&P. Now, we're in a downtrend, folks. This is a bear market. We've got lower tops and lower bottoms. Now, we've been in a congestion phase ever since October the 13th, but we haven't really gone anywhere. This has not exploded to the upside. Maybe it will, but Peter is focusing on this because the VIX index is now making new lows, as you can see here, and we had stocks making a new high here. And in fact, today we hit a 61% retracement of that previous high at 40.33. The fib number was 40.30, and then it sold off quite a bit. And the Dow Jones sold off a considerable amount. It was dropped over 400 points. And the NASDAQ, didn't break much at all. So as Basil says, it's a bifurcated market, and it certainly is. But anyway, Peter is saying that watch this time zone that we're in right now, and it should be very, very interesting to see. But if we close above that high that we made today at 40.33 in the S&P, I would think this is probably going to go even higher than what you might think. But this is still real early in the day. But the chart is just really quite good. Now, those of you that are listening, I want to mention that Adrian Togare is having a seminar coming in here pretty soon, and I think you'll enjoy it. And all I got to do now is find the link, and I think I'll be okay. Hold on one second here, and I'll post the link a little bit later. But it's a free seminar, answering questions and stuff, and it's really quite good. Give me 1 second here while I do the doggone it. Well, hold on. You don't want me doing this stuff while I'm working on these charts because I'll get it all messed up. Let's take a look at some markets that are really moving around here pretty good. First, what we're going to do here is we're going to look at the bond market. Now, here is the bond market today, and I want to bring this up here. Now, this has been moving higher. As you know, we said the bottom came in pretty much where it should have with that big ABCD. It was continuing to go higher. But look at this, folks. We've had the second 382 retracement. The first one was right here, and now this one came in today, and that was coming off the big low that we had down here. So this is a major 382, and as you can see, it exploded to the upside. Now, one of the things I use for timing is, my AI program, which is pretty much stuff that we have right out of the Floor Trader's Handbook, because these markets have a tendency to make bottoms and tops at certain times, and the probabilities of those happening is quite positive. Do they work all the time? Absolutely not, but they work some of the time, and that's the real key to looking at. Mainly the opening price is by far one of the key prices of the day, but each of these markets has a different opening price because the bond market is different than the stock market. Here was the prediction today that we were looking at in the Treasury bonds. As you can see here, the bottom that's being made right here came in exactly when we were making the 382. So that sets up a very, very interesting situation because you have a situation where if you're looking at it, you're going to be able to see that that has really strong probabilities of having a rally. Well, the trading gods on this one were coming along pretty well because it followed up pretty closely to what we thought was going to happen. And we'll get this up here so you folks can take a look at it. And you'll see, get up here and take a look at that. And there it is. And these are some of the things. I'm going to be doing a live trading session again on the 23rd of February, I believe. And we're going to have some fun on that one. But you can see this had a full point in it. You made your profit objective of the first part of it. So if you're in that, you put your stop at break even and, pray for the best. That's really what you want to be doing. So that's the main thing to look at. By the way, our guest tomorrow will be Jeff Huge of Alpha Insights. On Thursday, we're going to have Mike Moore of More Analytics on. He was back 2 weeks ago saying the oil market was getting ready to go, especially looking at heat oil, which was really informative. He'll be our guest on Thursday. And on Friday, we have Norman, who calls it to the minute Winsky. He'll be our guest on Friday. Following week, we're going to have Jim Bartolione, Stan Harley, and I have some report from Tim Bost. He's getting a little better, but it's going to be quite a while before he's able to get back to work, and that's the main thing. I wanted to focus on this S&P for just a moment here, folks, because we went right up to it. I'm basically a pattern person, and basically that's the understatement of the year. You'll notice here, this is where we are. There was our 61% retracement. It hasn't gone down very much from there. I mean, it immediately dropped and then went back up again, so it's holding relatively well. So if it gets above here, this tells us that we're going to go a whole lot higher. But if you make 25 handles on something, you've got to be able to say, well, I ought to take a profit somewhere. But, that's a situation where you've got to decide for yourself what you want to do, and that's what trading is about. I like that quote by Gary. Leslie Juflis's husband, Gary, had a quote that was, "It's not what you think, it's how you think." And that's exactly, part of that whole process of trade, what you see, not what you think. And that's the whole thing. But how you think is important, because you got to think in the reverse of what people usually do. They're always thinking about how much money they can make. It's not that. It's about how much money you can possibly lose. And that's the real key, to doing this. We had a big poker stuff tournament this week over the weekend down at the old Indian casinos here, where they gave some money to charity. We got together, 100 of us, a little more than 100, and we played for 3 days, a little bit each day, 4 or 5 hours each day. And I ended up making a little money. I came in the money okay. Didn't win the one like I won in Christmas, but I did okay. Had a lot of fun. And I was playing against a really, really good player. I was heads up with him, and he made a really, really bad mistake, and I caught it right away, and I put him put him between a rock and a hard place. And he's a much better player than I am. But after it came over, he came over to me and he said, "How did you know I made such a mistake?" I said, "Chris, I've been playing with you for so long." I said, "I know, what you had, because, you wouldn't be in hand if you didn't have something close to what I had." I said, "But you made the mistake of not betting enough." And that's when I knew that I was going to be the winner. So I beat him in that one hand. That's all it was. Anyway, that was a perfect case of making a mistake about, how much money you had at risk. And he had very little at risk to start with, but then he made a bad mistake, and that caused it. And when we get back from the break, we're going to take everybody on a free trip, folks. Get ready, your tickets. We're going to take the old Queen Mary over to the UK, and we're going to look at the prices over there. And also we'll stop by Germany and look at the DAX. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I wanted to post the chart of the E-mini S&P when it was making its high up there at the 61% retracement at 40.30. High was, I think, 40.33. As you can see, high was due around that time based on the timing cycles that they're there all the time. These markets repeat. That's what these algorithmic traders are all about. This one was just pretty much like the one. There was 2 here that I wanted to bring to your attention because they were sitting right at fib points when they were making it. And then I want to comment about cycles a little bit. You'll see here that it had a pretty big break, but then it's come back pretty good. You know, it's come back more than 61%. So that's not a bearish formation. It had a pretty good break. It dropped well over 30 points and didn't do it. But the other one that was very interesting here was the crude oil. I wanted to bring to your attention here. This is what we were making a new high on the week here. Just about the right time of the day that usually brings in a high. That band is about an hour in width, but if you've got a number like a 127 or a 1.618 number up in there, you know, you're able to sell it and you don't have to risk very much if it in fact works, because it has to work within about 20 minutes. You know, that's 10 bars on a 2-minute time frame, and this one again was pretty much spot on, and the market had a substantial breakdown from that timing area. So that's what we're trying to do when we look at these things. We know trade what you see, but we try to find out within a timing band how these things might work. By the way, I posted into the room here, into the Tiger Den, the website that you can go to subscribe to her free session that she's going to be giving. So if you want to, just go to the Tiger Den and you'll be able to see it. If you don't have it and you're looking for it, just go to Trading on Target. If that doesn't work, drop me an email and I'll post the link into you if you're interested in the psychological part of this business, which is rather important, okay? Rather important. Boy, what an understatement is. Okay, I want to go back to cycles for just a moment, okay? The first one we're going to look at here is a E-mini cycle, okay? It's a 30-minute. Let me get this up here, and I want to bring it to your attention because I have people ask me all about it, and I'll tell you why. I'm going to be looking at it right here. Okay, now these are cycles that are generated by the computer, and they look perfectly as you come in here. As you can see here, a move down, and then possibly a move up. Okay, now if you subscribe to something like this, which I do like cycles, if you get down to these areas where these cycle lows are supposed to be coming in, that's where you have to decide, is there a pattern there? Are there higher bottoms? Are there lower tops? Is it a 3 drive to a bottom pattern? Is it a 1-3-5 pattern? That's what's important to me when it comes to the patterns themselves, because that I can see. I know, where my price parameters are. If I just look at time and disregarded price, I'd have a really difficult time, because I need to know what the risk is going to be on some of these things, folks. I'll tell you, I know these markets pretty well, but I'm not perfect, and I make a lot of mistakes. I'm only right about 60% of the time. But the one thing that I don't do is I don't sit there for 3 or 4 or 5 days while the market's chewing my, kabuki out of sight. And that makes it, a whole lot harder to understand. Now, I haven't forgotten about the trip across the pond. I want to get this up here to show you. This is the FTSE, and as you can see, this is a shorter-term time frame, but it's following along. It's in an uptrend. As you can see, the pullback that it made, spot on, 61% retracement, and then it's having a pretty good move to the upside. What you want to watch here, you see these highs right in here, folks? These highs, that's a 3 drive to a top pattern right there. There's beautiful symmetry. Drive 1, drive 2, drive 3, boom, down to here. So what you'd be watching is watch that 382 retracement if it comes in, because if that's the case, this market tells you that you got a really good chance for the market to move to the downside. Okay, that's why we're looking at it. Okay, now I want to go and do the German DAX, and I want to talk one more time about the cycle stuff. And let me get this up here. This is a German DAX. Much stronger downtrend in the German DAX than in the FTSE. As you can see, we've had lower tops in here. And there's your beautiful Gartley pattern up here. It's your 786. And now you're having a little bit of rally, and that should hold it right in here, and then it should roll over to the downside. And the key word there is it should. And I tell you, because you don't know if it's going to work or not, because by golly, these markets are, like Mark Douglas always said, it's simple. Trading is simple, but it's not easy. And the main part about this that you have to get right is that 9-inch cycle between your left ear and your right ear. If you get that one right, the rest of this stuff is really easy. But unfortunately, some people fight it all the way, and I've been guilty of that earlier in my career, but that's neither here nor there. Okay, now I want to go back to the cycles one more time, because let me get this up here. I want to show you the corn cycle, because that's a real interesting one here. Because, what these cycles do, and I'm not, hey, look, I've studied all these cycle stuff, and sometimes it works absolutely perfectly. Other times it doesn't work. What I look for is when the cycles give me a spot and I've got price and time lined up perfectly for me, much like we had in natural gas. If you remember in natural gas, we said last week it was right near a bottom because we had that huge move to the downside. We made the target in the March natural gas by a long shot, went down 1.618. As opposed to AB equals CD. The February contract was a little more predictable, and it was higher. It had higher bottoms in here. So that's the main thing. But take a look at this now, because we're into the same area. Now, this is real simple cycle stuff, okay? Here's what I try to do. I do a simple time count. Look, I don't know what the cycle thing is saying in this. All I can tell you is this is an ABCD. Okay, your A leg to the B leg, it took 7 weeks. The C day to the D day took 7 weeks, and the market stopped there and started to go higher. That's all I needed to know, and it was setting right near the price that looked like it could possibly reach. Now, what happened with the March this is the February contract, but the March contract actually exceeded the ABCD by a little bit. Now, the open interest in the February is a little more than March, but somebody was really hammering the March, and they weren't doing that to the February. So that's why February is up about $3,000 from the bottom, but that's far from making a bottom yet. So what I'm doing now, I have not entered this contract yet. All we're doing is we're trading it are waiting for a trade to set up where we've got a really low risk, and I mean within $700-800, and this market really moves a lot. So you've got to risk probably $800 when you're trading it. So if we can get it down to where our risk is going to be really small, then I'll do it. So I watch half hours, and I watch a couple other things as far as the number of bars up, number of bars down, and see if the patterns line up. So that's what we're looking at here this morning. So stay with us. No guests today, but we got some interesting things to talk about. So stay with us, and we'll be right back after we take a break.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, I posted a chart of the gold market here because we were talking about it last Friday, how high it was going to go and all that stuff. And all we tried to do was to alert you for a way to enter the market on the short side because the market's very overbought, so you want to be looking to be a short seller. So this was Friday, and of course I was gone by the time this thing started, but we got all the way up here to 1934. And then you can see what happened here on Sunday. We rallied up to a 382 retracement, and I do a video on this each day for my 24/7 folks. I said, watch for this particular pattern because if it hits, it's got a potential to get down to here. You can see what we've done so far today. The market rallied up. Now, what we've done here is we've made now, remember this is shorter term, but the patterns are the same on any of these patterns. There's 0.1, there's 0.3, and there's 0.5. They all line up absolutely perfectly. So that's a 1-3-5 pattern. You have lower tops and lower bottoms. So the short-term trend in gold is down. Long-term trade, very, very strong. But short-term, it's on the downside. So if you're trading a 15-minute chart, you want to think in terms of that 15-minute chart that you have lower highs, lower bottoms. That's telling you should get right down here to the 78% level. You see we made the 618, so the 78 would be next. And then you want to watch it very, very closely from that point. But this level right here, from that high, was also a 382. Not only was it 61% of this level right here, it was a 382 off of the high. You can see how the market's been moving down, and that's what you're looking for. Okay, now I'm going to change gears a little bit here because I talked to Paula Webb today, and we were chatting, and my memories of Mark are so vivid because we were in this office together. I know his ghost is here because I can see him looking over my shoulder with his hand on my shoulder saying, "Why in the hell are you doing that?" And after a while, I started to realize I better pay more attention to some of these things that I'm looking at. But folks, let me explain to you about all this stuff with patterns and all the cycles and everything else. All of that is secondary to one thing, folks: money management. That's what you have to do. When you go to a casino and you put $20 into a slot machine, it's fun. I do it all the time, but the most they ever get from me on a slot machine is $100. And I don't go over that. Usually I put in 20, and if I make a little bit on that, I don't look for the jackpot or anything like that. I'm just trying to get a couple bucks out of it, double my money on my $20. Many times I do it, it gets a lot more than that, but the most I'm risking is $20. I know I play a $5 machine, so it's only 4 spins, but it works for me. Sometimes, the most I've ever won there was like $1,300. But when you put up only $20 and win $1,300, I mean, then they're not going to get you. I watch these people feeding $100 bills in these machines like it's nothing, and you can't do that. So let's get back to the trading. Money management is the key to everything, but you need some things when you're trading. I'm going to repeat these over and over again until you finally get it, because until you get it, you're going to have a difficult time. The main reason why you do this in this business, and believe me, folks, I've been doing it for so long. 60-some years I've been doing this. And that's what keeps me young. It's what I love to do. I can't play golf worth a hoot, okay? I'm not handsome or smart enough to be a movie star. I can't sing worth a hoot. I'm not a good actor. I couldn't be a doctor because I don't like the sight of blood. So this is what I do. And I like it because I'm good at it, and it pays my bills, and I get to meet a lot of really nice people and train some people to do this. But to do it right, and the only way you do it is to learn it yourself, and that's what I try to guide people to, is got to have a foundation of absolute trust in what you're doing works. Okay? You have to have that. You have to do the statistics behind it to see that it's done the right way. We get stuff from H.M. Gartley on his patterns that we looked at, the Thunderbolt pattern. Benoit Mandelbrot, the father of fractal analysis. What did he say? It was a lightning bolt pattern that ran all the markets, and it does. Some short-term or long-term, we've seen it time and time again. You have to do that with the foundation of trust that is unbelievable. That's why we wrote that Floor Trader's Handbook, to prove to you with the euro, which is the most actively traded thing in the world. We ran thousands of these patterns, and it shows that they're right better than 62% of the time. And when you do the trade the way it's set up, with lower tops, lower bottoms, and stuff like that, your payoff is 3-to-1 or better. They don't give you that in Las Vegas, folks. Every game in Las Vegas is based with a negative payout. It's always something. This is why when you do these guys that are spread betting, okay, when you spread bet, when you put a game on to see whether the team will win or lose, they charge you 10% to play their game. 10%! Holy cow, they must have learned from the credit card people. That's why, unless you're really good at it, if you're really good at it, 10% is not a big thing. But I listen to these guys when we're playing poker, and they're betting on, none of them win. And why they do it? Well, it's exciting to watch and to lose your $100 or $50, whatever they had to play. Everybody was betting on Dallas yesterday, so they were happy about that. But there were a few people that were betting on Tampa Bay. I happened to be one, but I didn't bet. I was just hoping they would win because I think the champion that Tom Brady should be recognized, and people were saying, he's over the hill and everything. Like, they forget what he did. I mean, unbelievable statistics. It's going to be a long time for any quarterback matches what that dude did, that's for sure. He's the Willie Mays, Mickey Mantle, Ted Williams in baseball all wrapped up into one. He's the real deal. Okay, you have to have that foundation of absolute trust. Now, to get to that point, you have to have certain skills, okay? Skills are what pattern recognition is about. You have to be able to recognize what the pattern is, okay? And once you perceive that pattern, whatever it happens to be, you have to do it. And you got to do it methodically. In other words, you got to be able to do it one thing at a time so that you're able to see that things are lining up the way that they absolutely should. Now, are they going to work all the time? We already know that's the answer to that. You have to focus on how much you have to risk as opposed to how much you're going to win. Once you get those things turned around, then you got to think like the slot machine. Nowhere on that slot machine does it say, I've taken in $1.2 million more than I've given out. Nowhere on the machine does it says, you have no chance of beating me over a long time period, okay? And it also says, keep feeding me the money because I don't care about you. And that's it. Do you realize that about 10 years ago, they had slot machines in Las Vegas that would take credit cards? You know how long that lasted, folks? About 3 months, because the bankruptcy rate went absolutely parabolic to the upside. And boy, the gaming commission shut them down really quick just to protect the customers. Because it's entertainment, folks. You're not going to beat those things for a living. Get this. Hello, operator. You can't do that because they're built to make money. That's it, The difference between gambling and poker is you can decide when you want to play, okay? And you can decide what the probabilities are of when you want to play. No other game is like that, except our game, the trading game. We can do the same thing. We decide when we want to go in, how much we want to risk. That's all predicated on that same thing. Unfortunately, I'm a better trader than I am a poker player, but I do okay. I don't make a lot of money, but I'm positive, which is better than most. Hey, we've got to take a break here, I think, in a minute. And when we get back, we want to talk a little bit more about the psychology of this because it's good to understand. You can see what you're supposed to be doing and everything, but there's one more link that you have to do. Foundation of absolute trust, perceive the opportunity that you see coming, and then the last thing will be when we get right back. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, I want to post a chart that's active right now. This happens to be the soybean chart, March soybeans. You'll notice here that it has been heading up for quite a while here. We're looking for new highs to be made. We have multiple patterns coming in here. We're just about into this area here, but we need to get up just a little bit higher to match these highs. We've got this beautiful ABCD pattern here, ABCD right there, and then a series of them all the way up. Look at these higher bottoms that are coming in here, folks. This market has been in an uptrend, higher bottoms, higher tops all along the way. But what we were watching today, and I wanted to, because we talk about this 382 pattern so darn much that I don't really bring it out too much because most people don't take the time to understand it. But if you just did a 15-minute chart on the soybeans, you'll see, and this was coming in after a very, very long weekend where the markets had been closed, okay, and you'll see that the market came down early in the morning and stopped at the 382 retracement right here, within 1 penny, folks, and it's rallied a huge amount here today, well over 30 cents. But you'll see the other 382 stopped right here. That was off the low right here, so higher bottoms, look at this, higher bottoms all the way, and now it looks like we're moving up to the upside. That 382 pattern is the best kept secret I've seen in a long time. When you add that with the price, the opening price or something, you're looking at an edge that is just really unbelievable. As far as edges go, I think the best edge, from my perspective, the ABCD is extremely good, but for really good trading and edges are the 3 drive to a top pattern and the 135 pattern, the Gartleys and the butterflies. The ABCD by themselves are good. They are good. They're better than 60%. But if you're going to do that, you got to use really strong money management in order for the darn thing to be on your side. That's the whole thing. Okay. Now that's my opinion. And of course, I'm going to have to stick with that because I've been living by it for a long time. Okay. I talked to you about the 3 things. One, foundation of absolute trust, right? And then you have to perceive that the opportunity is in front of you, right? And then the most important thing, Johnny, put your hand down. You know what it is. You got to put the order in. And that means you got to take responsibility to put the order in. Click the button, say buy. Click the button, say sell. Put the stop in and forget about the darn thing. Because you don't know what the trading gods are going to do to you, but nobody else does either. So if the trade's going to work, it's going to work. If it doesn't work, it doesn't work. That's basically it. So that's what my story is, and I'm sticking to it. Going to be doing more and more of the psychological stuff in here, folks, because it's extremely, extremely important. Okay, now, someone has asked a question about the natural gas, and I think the best way for me to try to do that would be to bring up the old natural gas contract. And let's get this up here. I've already done that. I want to do the smaller one because that's the one we're watching right here. This is the daily of the natural gas. Hold on, we'll get up here. And you'll see that we've completed all of these patterns. Now, there we go. Get this up here. You'll see we've had a pretty good rally coming off the bottom here, but we've got, look at this thing. Look at these lower tops in here, okay? Lower bottoms. It's been in a downtrend. Well, we think because of this ABCD, and we're down here and match these lows by just a little bit, that tells us that, and not only that, but we have 7 down weeks and 7 down weeks. And let's do that one again just to show the folks what we were talking about when we were watching this, because this is just simple timing stuff. This is not rocket science. You don't have to fly to the moon or anything like that to see this. Do a simple count, see your ratios. Look at that. AB equals CD, perfect down here. Yes, last week was the 7th week down, just like that one was. Now, is this going to make new highs? Who cares? If you can do a BC swing like this, you see a BC swing will take you way up in here. That's like $8,000, $9,000. And look, then you would have a 1, 3, 5 pattern to the downside. Okay? That's it. So anyway, that's what we're paying attention to with that natural gas. Now with the soybeans, which I charted just a little while ago, that's not a sale up in here, folks, because we haven't reached that top yet. We got to get soybeans up around that 15.98 level in the March beans, which is not far away. And then you'd have a really good chance for a potential for a short side. Up until that time, buy the breaks. The break this morning right at a 382. Look at the bonds. Break this morning right at the 382. Keep an eye on those. You know, that's what you're really trying to do. So that's pretty much it. Someone's asked a question of, you know, what positions we have on the 24/7. Well, we shorted copper today at 423, and we sold the S&P at the 430 and change. It already made the first profit objective, but we still have the position on with a stop above 433. And we had one other one, copper. I'll think of the third one in just a second. Third one, the bonds. Those were the ones that we were watching this morning here for the people. Now, I want to share with you a chart from one of our friends over in the UK who's a professional oil trader and happens to be along the oil market from a very, very low level. I'll bring up here, you'll be able to see it. And there we come up here. There's where we go right here. There's a, you know, you can see here on the downside, you know, we had markets lower all the time. Okay, now you have the markets trade. You have a higher bottoms now. We're starting to make higher tops. We needed to get it above here. And we had a little back off of the 78% level this morning. But the target is up in this zone right here. So during this quick move up, look for places where you might get a 382 retracement to the downside or an ABCD, something in that direction, because now you have a higher bottom in here. So as long as you have that higher bottom, your trend is up, and that's what you probably ought to try to do. Now, you can do that with moving averages or MACDs, whatever works for you. But if you believe in it, if you have that foundation of trust in it, that's what you have, folks. The rest of it is out the window. Who knows what it's going to do? It's not how much money you make, it's how much money you don't lose. Once you understand that, you're 90% closer to your goal, okay? But you got to work on that 9-inch cycle, folks, from the left ear to the right ear. That's the one that counts the most. It's not what you think, it's how you think. Trade what you see, not what you think. That's what it's all about, you know, because you don't know as much as the market knows, because it knows everything and you know just a little tiny bit. But that little tiny bit is the edge that'll keep you in this game. And that's what I try to do to folks, is to convince them that's what you've got to do, is to focus on that cycle stuff. Whether you use trading in the zone, anything that you want to do, essentials of trading, any Tony Robbins, Napoleon Hill, anything that can turn your thinking around, so that you're thinking positive and thinking in the direction of where you want to be, you're going to be far better off. Folks, I've lived a long time. Look how many of my friends are still doing this in the 80s. I mean, all of them are. You got Larry Williams, Peter Eliades. I mean, all these, a lot of them are in the 70s and stuff. I mean, Twentyman, you know, they're all still doing the same thing because it's fun and we love it. And we can pay the bills. If you can't pay the bills, it's not as much fun. But if you do some of this stuff, you can pay the bills. It's not rocket science. It's not. You got to do 3 simple things. Get that foundation of trust is number 1. Let's take a break. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted the chart of the crude oil over the last 10 days, but I wanted to emphasize this 3 drive to a top pattern that we had up in here. You notice that the tops were equal in time, and also we had a beautiful ABCD completing up in that area right here. We had a pretty good sell-off, but look what here's what you want to be prepared for. Here's where the perceive an opportunity comes in. What we're watching for is to see a 382 retracement in crude oil down there at that 77 level, basis February crude. Let's try that again, March crude. It would really be a really good spot because you'd be right at a 382. Okay, and if this is a trend channel, which it certainly looks like, you've got higher tops and higher bottoms, so this would be a really good place to look at it. Now, ideally, it would come with an A, B, C, D to the downside. Then you've got something that is really good. So that's on the watch list. That's what I do here, so try to pick these out. I can't pick them all out, but I will pick out some, and we'll see. You'll see how they work out here in the future. So that's what we're watching here this morning. By the way, our guest tomorrow will be Jeff Huge of Alpha Insights. On Mike Moore, More Analytics will be on Thursday, and on Friday we have Norm Winsky. Following week we're going to have Jim Bartolione, and I'm trying to get Mr. Joe DiNapoli on if I can take out the politics out of his thinking. He's a great guest because he's really good at what he does, but boy, He's a little eccentric when it comes to politics. Not that he don't care he's Republican or Democrat. He's just eccentric with everything. And some of his views are a little bit way off the wall. But he knows the market's pretty good anyway. So anyway, keep an eye on this crude oil, folks, down here. A little bit of a pullback with an ABCD. It's got a lot of things going for it. So I think something that you might want to think about. Also, watch for the gold on a 382 retracement. So live every day in an attitude of gratitude, and may God bless.